Okay, guys, so this segment is called market structure. So this to me is the most important segment when it comes to me and my charts. So what I want to know is before I jump into any traders, what's the trend of the market? So before we pay attention to anything concerning the chart over here, let me draw something for you real quick. So let's pay attention to this. Right? So this is an example of an uptrend. So why would I say that? So based on what I drew here, this is a low point, and that created a high point. And then we got a higher low point, and then we got a higher high point, another higher low point, and another higher high point. When the market is making this series of events, it's called an uptrend. So now what is a downtrend? When you get the opposite, you have a high point, then you got a low point. Then you got a lower high point, then you got a low point, then you got a lower high point, and you got a low point. So the market is making lower lows and lower highs and lower lows and lower highs. And you want to understand this so that you could go into the market with everything that we just did and start to trade. So now let's go to the chart, knowing this information here. So this here is an example of an uptrend because we see the market making highs and higher lows and higher highs and higher lows, higher highs and higher lows, higher highs, higher lows, higher highs, higher lows. All right, so you want to be on the buying side on a trade like this. So let's highlight some areas using the eclipse. So let's start here. And then we highlight in here. And then we're going to highlight here. Now we're going to highlight here. We're just going to continue. Nothing fancy. And this is exactly what you're doing over and over. Right? So guys, this is the uptrend. So now how do we put together this trend tool with the key level stuff that we just learned? Very, very easy. So let's watch this example here. This is an area of resistance that's in support. And if we draw this key level here at 27, right? And then we also put in this level here at 26.75. So we're watching the structure of the market. And we're seeing how the market is breaking these levels and testing back these levels. And then we have support and then we have the uptrend. Simply as just watching this area, market breaking above the area, come back to the support at resistance, and then watching how the candles are getting back over the area. We know that market is making higher highs, higher lows. This is support that's in resistance. And now we could take trades in that direction. So in our uptrend, we buy, and in our downtrend, we sell. So our example of that downtrend would have actually been the best point to tell you that would have been here. This was a temporary downtrend. A better example would be over here when the market was making highs and lows and lower highs and then lower lows, lower highs and lower lows. So when the market is trending, downwards, you sell. When the market is trending upwards, buy. This is something very key to my style of trading. So this segment was market structure. So we all got an example of an uptrend and a downtrend. That's as simple as it gets. And it all started from understanding this. So this segment again, market structure. Okay, guys.